Hi, this is Greg Bridge with Trading the Pips. Today we're going to be going over the NZD JPY currency pair in the weekly charts. So right now, once again, we have a Fibonacci retracement set up, and we also have our arrows set up where we believe the market could be going, whether it be up or downwards. So right now we know the market's in a downward phase, as you can tell by these candlesticks going downward. It at one point we see that the market had dropped down to the 67.220 currency rate before jumping right back up over the 50% range. Actually, the 50% retracement served as a support before it jumped up a little bit past 71.8 area. And then you can tell we have a resistance line drawn right around the 76.286 area. And it actually did go a little bit past that, but not much. Maybe about 40 pips or so before drastically descending straight through that 61.8% line. Um, we see a gap right here, but it dropped right through that 50% line. And right now, it's at that 38.2% Fibonacci retracement line. So, what do we see happen? So, for right now, we see that it's a possibility that at 38.2% Fibonacci retracement line, we could see a bounce off that line, and we could possibly see it going straight up through the 50% up to that 61.8 before dropping down below the 50% range. As you can tell, we have a green support line drawn. You can tell with some type of price action right around that area of the 72.5 range. So if history serves us, we're probably going to see some more choppy price action in between that 72.5 on up into the 74 range. Um, um, Possibly, right around that 61.8% Fibonacci line. Then it's going to go down and then possibly go straight up through and getting close to that 76.286 range once again. Do I think that is our high? For the rest of this year. I actually don't believe we're going to go past the 76.286 line for the rest of the year. Um, but our high for the year so far is the 78.770 area. So I definitely don't think we're going to see that area anymore this year. Um, we're actually about 6 months into the year. Next month will be 6 months. So as you can tell, it's taking a bit of time for it to go from here down to here. Actually, almost 4 months. So we definitely need to consider that. Hey, in the next 4 months, hey, at the very most, it may make it up back up to this area, the 76 area. But as for now, I think we possibly won't have a problem getting back into our 7374 area. Now, let's say it doesn't go that way and it goes opposite. I believe that it's going to drop through the 38.2 down to our 23.6 range before going back up, doing a small retracement back up probably around the 38.2 retracement zone before falling right back through. As you can tell, like I said, price action is around the 72.5 range, so that will serve as a support slash resistance, which means if we can get past that 72.5 is a possibility we can see higher gains or higher momentum, but the possibility of it happening is slim to none, and the market will reverse going down, going through the 23.6 zone, about halfway through before going up a little bit past it, 23.6 again, and falling, going straight down to almost pretty much 100% retracement to the 67220 range. Now, if we do hit that 67220 range, what do I believe is going to happen? We may go a little bit underneath that, maybe 671 range, but at that point, do I think we're ever going to make it back to the 78.770 or the 76 range, price range? No, I don't think we're going to make it within this amount of time that we have left inside this year. I think that if we do drop this far down in the market, that we'll probably see it go up right around to that 725 10 range, and that will be the highest that we'll see it reach for the rest of this year, because it'll take a little bit of time for it to go back up. Now, there's always variables in this. Obviously, it's down low like this because of the U.S. China trade wars. So, if we come out with some type of news with the U.S. China trade wars being resolved, then it's a possibility we can see some type of crazy wick shoot up and possibly put us right back in the areas that we would want to be at. So hopefully all this pans out for me. Like I said, once again, I'm in on a trade, actually right around this area that we're in right now, and I'm hoping to catch about 100 wicks, 100 pips, and I think I want to say around the 73 range, between the 73.5 range, maybe 7.4 range. Just depends on that gap area right there. But anyway, once again, hopefully you guys are in on some type of buy, or if you're not on a buy, hopefully you got in on the sale when it was up to this range and started dropping down. This is Greg Bridges with Trading the Pips. Hope you guys enjoyed, and have a good day. Bye.